also tracking what's happening with Alembic Pharma because the company recently reported its numbers. Plus, they're guiding for a bullish number, especially on the operational front. Let's try and decode that with Mr. Raj Kumar Baheti. He's the Director of Finance and Group CFO at Alembic Pharma, joining us on the show now. Raj, hi, thank you so much for making time and speaking with us. Wanted to begin by asking you about your confidence around the 15% margin that you have talked about. On one hand, you are seeing that the US sales have been tepid, close to 5-year lows. There is the expectation of a rise in total expense as well. How then are you confident of maintaining that 15% margin level?
Thanks, Anisha. Thanks for bringing Alembic Pharma on your prestigious show. Really speaking, we don't give guidance. So this 15% was in a discussion with analysts and investors, where based on our Q4 EBITDA numbers, we said a 15% number is maintainable in 23-24. So you are right, US continues to be under pressure, but fortunately, if you have seen, India branded business has been doing pretty well. I mean, throughout the last year, India branded business did well, including in Q4. Of US, the other international generic did very well. It grew almost 30% plus. API did very well. API grew 41% in Q4. So that has led to improvement in margins. I mean, on a QOQ basis. And I think going forward, two things we expect. We expect the other verticals to do equally well. I mean, they won't grow obviously 40% every quarter, but we expect each of these businesses, that is India branded business, international generic ex of US, which is US will come a little later, but API and should continue to do well. Now, as far as US is concerned, we still see price erosion. A lot of people are now talking about price erosion having been stabilized, or erosion will be a little lower than in the previous period. We hope it does happen. But what has happened is, we have started manufacturing and marketing from our newly set up facilities, which recently got final US FDA clearances. So we have started launching injectables. We'll start launching onco products in US. Derma has started gaining some traction. Of course, Derma has been in market for 2 years, but now it's getting some traction. So hopefully with all these, will contribute to additional turnover and then probably push up our EBITDA margin. Second thing is, on cost side, you are right. I mean, we are already seriously looking at rationalizing our R&D cost. We have been doing it for last couple of years, and this year, meaning 23-24, the R&D cost will further get reduced. Same way, other operational costs, I think every penny is being looked at seriously. For wherever there are saving opportunities, we'll try to save.
Right, Mr. Baheti, this is Harsh also joining in. Let me quickly ask you, you spoke about product launches, but there are 20 to 25 products in the pipeline, especially where the US market is concerned, right? Now, if I take the current quarter as the base, what kind of incremental revenue are you looking at from these 20-25 products? How can we see that add value to the top line?
So, Harsh, US market, very difficult to predict. In fact, the entire industry is struggling with the price erosion and struggling with giving a kind of a guidance or an indication of how prices will behave. So a lot depends on how existing players will play and who will be the new entrants to the market. As far as we are concerned, see, our control is limited on things like supply chain, keeping a healthy customer relationship, making sure that customers' demand are met on time, inventories are adequately stocked in US, and we don't lose out on opportunities. Beyond that, it would be extremely difficult to give a guidance on the revenue side on these new products. And to be honest, we are very new. Probably after 2 quarters, post September 2023, we'll be in a better position to talk about how these new launches are doing.
Glad to hear more on those new launches. But Raj, how's the pricing pressure in the US? Because I remember earlier you had taken write-off to the tune of almost 1,000 crores with respect to, the cash recoveries which weren't going to happen, plus the falling generic prices in the US. On one hand, there is report of drug shortages in the US, and on the second hand, there is this pricing pressure. Help us match this dichotomy.
No, you are right. But this drug shortages has just started to appear in last 2 quarters. Prior to that, there were oversupply. I mean, everybody were unanimous that there is an oversupply. There is an overstocking with the distributors of the US, and that was the cause for pricing pressure. Also, in last 3-4 years, there has been a lot of these alliances, and the almost 85-90% of the US market is now controlled by 3 large alliances, and they have the purchasing power to squeeze the vendors, I mean the generic companies, to really the lowest margin. But they also feel that beyond a point, beating prices will not help them, because that will.
So Raj, that's my question. If last couple of quarters those shortages have started coming up, at least in the near term, do you expect the pricing to get a lot better, at least in the next 2 to 3 quarters?
So it is more product specific. So some products, their pricing will improve, of course, but whether the products which are being marketed by me gets covered in that or not, we are still to see. So we are also examining. Our US team is keeping a very close eye. Wherever there are opportunities, we are taking price increases. But Anisha, also you must appreciate, a lot of these supplies are through contracts, which are little medium to long term contracts. So I can't increase the price tomorrow even if there is a shortage. But wherever we do spot purchases or spot sales, we surely would like to take some advantage of price increase.
Right, and Mr. Baheti, how would you describe the Indian market, especially with regard to FY24? Are you expecting volume-led growth, price-led growth? How is the Indian market evolving, if I can ask?
So, no, very good question you have asked. Okay, so Indian market, we are on record saying that we should grow 30-40% better than the market, than the IPM India market. So just for example, just to clarify my statement, if India business grows by, let's say, 10%, we expect to grow by about 13 to 14%. If India business market grows upwards of 10%, then accordingly, I think we also expect our growth to be better. Having said that, I think we are doing extremely well in specialty segments, particularly in diabetology, gynec, even cardiology. We are okay. Gastroenterology, which was underperformer last year, should be doing much better this year. So I think in all specialties we have got that critical mass, and now we are increasing our presence. Doctors are noticing us as a serious player, and we are getting more prescriptions. Going forward, I think 23-24 we are quite confident of achieving higher than industry growth rate, with the specialty outperforming the acute, or the what we call acute segment.
Right. So, Raj, just before I let you go, one word answer, you're expecting better growth than the industry. Will it be at least double digit?
Absolutely.
Okay.
100%.
Okay, Raj, on that note, we'll let you go. Appreciate you joining us on the show at this point of time. But